Well, good afternoon, everyone. Welcome back to the channel. So I wanted to follow up yesterday's video on the YieldMax dividends with some further analysis of the best payers. So let's go over again really quick the dividends that they declared yesterday. And some of them were really good. Some of them were surprising given the performance of the funds, like Tesla. 68 cents was, kind of surprising. But anyway, so we had several of them that paid over 100%. MSTY paid 120%. CONY paid 119%. NVDY paid 107%. And then let's see. So that's one, two, three. A couple of them were in the 60s, like AIYY, AMDY. But we're going to focus on the top payers. Tesla was still 53%. That's really just shocking compared to how the stock and the NAV of Tesla has done. Okay, so let's look at CONY. So the underlying is Coinbase for that one. NVDY, of course, is NVIDIA. And then MSTY, of course, is MSTR. So that one was really no surprise, a $4 dividend. Something interesting that was shared, by the way, on the Curve interview with the CEO yesterday. Uh, he said that these strategies, like in the 80s and the 90s, were reserved for high net worth people. I don't know if that means like just the option strategies that they're using or what. I probably should have asked for a little more detail on that. But like now, I mean, people can do these options on their own, obviously. We have someone in the comment section that does them, on their own, probably daily or every trading day. But as far as like paying for these funds, paying a fee for these funds is questionable for sure. Welcome, G-Man. Wow, you're getting to be like the first commenter on here. Oh, look who's on. They're all crap. Well, so that's a good question. So I was listening to, I don't know if you watched my interview with Howard, the CEO of Curve Funds yesterday, but him and Jay have both said the same thing. That like in the 80s and 90s, that these strategies were reserved for like high net worth people. But you're saying that no high net worth people are investing in these funds. Well, I don't know. In another Discord, there's a guy with 9 figures investing in them. That's half joking. CJ Navaj is right. It was a broker thing. They handled the options for high dollars investors. Okay, so it was just options because the way I'm looking at it, it's the option strategies, but like we're paying for these funds, so it's like what's the point of paying? I don't know. I'm trying to navigate this as a content creator the best I can. It's getting like politics. Like we've got two very staunchly opinionated sides, and I'm just trying to be in the middle here. Institutions are no whales and more coming. Ah, good. All right, hash it out in the comment section. I'll get out my popcorn, guys. I enjoy these. Okay, while you all are hashing that out, keep going. By the way, comments are great for the algorithm. While you all are hashing that out, um, whales like less risky. They buy Berkshire. Okay. All right. So let me pivot away from this one, and let's look at the top three. Oh, CJ Navaj has is issuing a little bit of a challenge here. Okay. Anyway, I'll research that later. All right, so let's look at, let's see, is this the screen I want to use? No, I'll do a new screen. Let's see, seeking alpha. Okay, here we go, seeking alpha. And that's what we all want to do here. We all want to seek alpha, right? We all want to beat the market. Oh, I'm about to break out my popcorn. I manage the YieldMax board. I can do it. What YieldMax board? Oh, is this multi-shiznit? I don't see the point of owning any of the single stock ETFs from YieldMax. FEPI seems to be the sweet spot between yield and price appreciation. I agree. I do agree. FEPI, I like FEPI a lot. FEPI and NEOS funds are the best income generators I found. Oh, you run the Facebook group? I might have to actually join that. Hey, I would say Hoffman's a very smart guy. He knows what he's talking about. So, I guess, tread lightly. Okay. Yeah, send that to me. Are you in the Discord too? I know a lot of people use different names in the Discord. Sounds good. Oh, you already posted my. Oh, perfect. Well, thank you. Thank you for being a great surrogate for the channel. Okay, here we go now. Seeking alpha. Okay, so CONY. I'm going to compare CONY to this is what I'm going to do. I'm going to compare it like to the underlying. So right now, check this out. So seeking alpha, they have it rated as a hold. The quants don't cover it, maybe because it's so new. So I'm going to go to charting and I'm going to compare each one of these. I'm only going to look at the top dividend payers and compare them to the underlying. There's a point to be taken home here. See anything yet? Well, this isn't a fair comparison because this one hasn't been around that long. Notice anything price return wise? Um, let's see here. See, I can't really compare it. Well, see maximum. It's an unfair comparison. How do I do like a custom? Ooh, logarithmic. I haven't seen that since math class. Let's see here. 6 months. Ooh. Notice anything? 6 months. Total return. I know what we're going to find. We're going to find that the underlying outperforms in terms of total return. So just pointing out, I'm just the messenger here. As the saying goes, don't shoot the messenger. But CONY's total return is great. 134% is awesome. But the return for the underlying is 252%, which happens to almost be double the return of the income fund. So part of me, I see both sides of this debate. It's like being an independent politically, like it's tough being in the middle because I see both sides of this. I see, wow, the income is great, but I also see that a better total return can be had. So I'm just pointing this out is all I'm doing. Um, and again, like I say, if you hold long term, these long term growth stocks, which I don't know if I would consider Coinbase like a great stock. It's mainly running up because of Bitcoin, of course. But if you had this for a year or so, then you sell some shares, pay the long term capital gains rate, which is cheaper than the ordinary income tax rate, by the way. So that's that. I want to look at the last month here. So the dividend premium that we harvested, there was a lot of fluctuation. So see some days, like there was a day we were down almost 9% in the CONY. And that's in trailing, 1 month, of course. So you see we fluctuated a lot. Um, so that's how the dividend was harvested there. But in terms of like total return for a month, we're up like 1.44%. Year to date, we're up 26% versus 50%. So again, the underlying is almost doubling what we have here. The next one I'm going to look at, since we can only do like 7 of them, I'm going to look at, what was it, NVDY. This is one of my favorites, of course. The underlying, that is, NVDA. So what we're going to see here, for those with like a statistical or a mathematical mind, you're going to see 2 clusters of data here. Your first set of charts are going to be up here. Those are going to be the underlying. Down here, you're going to see the 2 YieldMax funds. So you see there's like 2 groups of data, so to speak. Now, if we look here, we do see where one briefly crossed over. Well, this is CONY at the bottom here. So it briefly crossed over a Coinbase stock. They kind of got cross-wired. They have nothing to do with each other, of course. But year to date, NVDY is the best investment of all of them in terms of total return. It does pay a slight dividend, by the way. We were going to look at 3. So of course, MSTR. MSTR is like the crown jewel at this point. And MSTY. I'm sorry, MSTY is what I meant. So look at MSTR stock year to date, 168%, MSTY 98.85% in terms of total return. That's still a phenomenal return. You can't complain about that for year to date. But as you see, the underlying here, the best investment of this group for the year, MSTR. Now, if you had just bought in this year, you're paying, like a short-term capital gain, which is more like ordinary income, not long-term capital gain. So the dividends here that were harvested in the top ones, we can see if I just take out those pesky underlyings that some of us dividend investors don't care about, and just look at the YieldMax funds, then we've got total return NVDY is actually negative for the past month. CONY 1.44%, MSTY 46.64%. So we can see obviously the big run-ups here, and then some drop downs and MSTY. We can see the big $4 dividend premium, how it was harvested there. NVDY, I mean, we can see how these were the three biggest ones, of course. All right, I imagine the comment section must be blown up. I'm looking forward to reading a novel here. We'll start from last to first. Bernard Clement says, thanks, coach. You're welcome. PP, what about PP? What's your name here? Rebariki? Rebariki, okay. Multi-Shiznit, I love this name. Most of these high-income funds exist for the managers to reap their expense ratio. How dare they? Why do they care about NAV when they get their cut no matter what? Now, I like the curve guy yesterday. He was, I don't know if you'd call him like, a salesman or what, but he was doing a good job of kind of explaining the value add of the fee. He talked about economies of scale when it comes to options trading and things like that. Um, how they get a much better price as an institution than like the individual retail investors do. Coach Link is in the comments, got to run, making dollars. Oh, he's making money. See, Hoffman, he's too busy to debate you. He's making big money. No need. You do you, bruh. Buy that MULN and IEP. Yeah, well, IEP is that's in the tank too, of course. A retail non-YieldMax cult member. Well, so to be fair, so Hoffman made some really good points. I mean, he always makes good points, but since he's been with me now for about a year or so, since he like found the channel and subscribed and whatnot, um, and I want to say he did invest in YieldMax early on, but he came to his own conclusions about it, as we all should. Uh, well, that's funny. Yeah, they do. They actually, I will say this: a lot of these fund managers, they ask me, they say, "Okay, so your audience is mostly retail," and when I say that, the light bulb seems to kind of go off, and they say, "Okay, we'll schedule something with you." It doesn't make sense for whales to invest in YMAX. What about IMAX? Would it make sense for them to invest in IMAX? That's just a stupid joke. They already have large amounts of capital that will provide a decent amount of money at 5% treasury yield. That's true. Well, that's a good point, actually, because if you have a lot of money, money begets money, as they say. So if you have millions of dollars, you can get that 5% and you can make your annual income there. Retired Cop says, good morning. Yeah, it's too early for my apple juice, right? Don't see the point of discords. Oh, discords are fun. Anyway, all right. So that was a good one. Thank you all for tuning in. Like, comment, and subscribe. And wait a second. Let me see some other comments here at the bottom. Do you follow PP, tracking PayPal? Well, I'm only focused on the top ones. I'll do another video for the other funds. I just wanted to cover the top ones. I can do a bunch of other videos. Uh, I need to milk it as much as I can. And why not? I mean, most other YouTubers covering this stuff do the same thing. So why not join the party, right? But I'll do more on them for sure. I got to keep up with like 2 or 3 a day, otherwise the algorithm I just get buried. So let's see. Still bag holding on TSLY. Oh, you are. You didn't sell. So I'm like you actually. I I know I probably should sell. Oops, did I just say that? Sorry, YieldMax people. Um, I do instinctively feel like I probably should sell, but I just can't justify like the loss at this point. And part of me, like, I think Tesla will recover one day, and I feel like with my luck, like the moment I sell is when Tesla would start recovering. So I'm just kind of bag holding too. Everyone, no, a lot of people have actually said they sold. I got one video that I did like a week ago. I had like 6 people on the video tell me they sold out of Tesla. I'm close to break even with the dividends. I need Tesla to be back at 210, then I'm gone. Yeah. Well, remember, I infamously said before the split that I would sell if it got back to 18, and that ruffled some feathers for whatever reason. The idea, now here's the thing, I do like to stay in the middle on stuff, but if the idea of buying low and selling high ruffles feathers, I don't know what to tell you. Project X Woodworking. I sold out of my 1,000 shares of Tesla. When it split, I got out at 1890. Feel really good about it. Got into NVDY. TSLL just changed to 2x and said, ooh, nice. I might have to do some options on that one. I made a nice gain one time on it, but then I lost my ass the next time. So it's hit or miss instead of 1.5x bull Tesla. Interesting. All right, well, we're going to end it there. Thank you all. Like, comment, and subscribe, and I'll be back as soon as I can. See you all. Maybe we'll do a live stream tonight. I won't be home until late, so it might be like 11 o'clock or so, but we'll see. All right, see you all. Take care. Have a good one. Bye.